So I will introduce our speaker for the day. It's Jeremy Britton from Boston Trading Co. Jeremy is a financial advisor, investor, author, and serial entrepreneur with over a dozen startup businesses. So today he's going to be talking about crypto. And with more and more people still investing in crypto, the chances are that some of your clients will have some of these digital assets. So, how do you stay ahead of the curve, and how do you protect your clients' interests and add value in this fast evolving sector? Um, so, Jeremy's going to explain to us how we can have greater control, fewer compliance concerns, and the ability to meet growing client demands with confidence in this webinar. And just to say, as you know, we cover a broad range of subjects on these webinars, all to do with accountancy. We're not affiliated to any of the speakers, so we don't kind of endorse anything, but it's for your information. So listen up and do your research, and I'm sure you will find this really, really valuable. Okay, so I am going to spotlight Jeremy now so that he can take over. And am I right in thinking, Jeremy, that Boston Trading Co. is nothing to do with Boston in Massachusetts?
Nothing to do with Boston, Massachusetts, no. So if you look very carefully at the logo, you might notice what it is. And someone could put it in the chat and sing out what they can see in the logo. Oh, hey, there we go. There we go. Thank you. And it's a Boston Terrier. It's a Boston Terrier, exactly. So I've had 33 years in financial services, so I'm absolutely left-brained, analytical, mathematical. My business partner and co-founder has had 25 years in corporate law and corporate governance. So she's very analytical, mathematical. And when we decided to put this company together, there was myself, another financial planner, 2 accountants, a couple of lawyers, a couple of tax specialists and structure specialists. And none of us were creative types, not one. So what are we going to call this company? We've got to come up with a logo and a name, and there's the dog under the table. That'll do. So, yeah, Boston Terrier.
Fantastic.
Had
Why
to
not?
call it something.
Okay,
Absolutely.
so I'll hand over to you now, and if you've got slides to share, yeah, take it away.
Yeah, absolutely. So where's Leanne? You know, she feels a bit clueless. So over the next 3.5 hours, Leanne, you're going to learn everything all about crypto. I'm kidding. It's not going to be 3.5 hours. It's already 9:30 p.m. for me in Australia, so I'm not going to stay up that late. I just want to make sure that we actually have the right slide there. Holly, can you tell me if we've got the right view?
Yeah, can you still hear me?
Yep.
Yeah, great.
Yep. So as long as we don't have all the notes and all the speaker things.
Yeah, so I can't see anything just yet, but
okay. Just give me a second. We did practice this before.
we did,
Make
honest.
sure. All right. I'm hoping we've got the right slide now.
Yeah, so we've got outcomes on the left, and then we've got some text on the right.
Yep. Perfect.
Real.
Okay. So the outcomes, we want to just understand the basics. I mean, I've been doing stocks and shares for 33 years. Can I explain it to a 5-year-old? No. Do I still have a lot to learn? Absolutely. I don't think anybody ever fully understands the stock market or the property cycles or that sort of stuff. So you just want to learn the basics. You want to learn 5% more than what your clients know so that you look smart, and you will want to avoid the lawsuits. So Holly and I were just having a chat earlier about, people have heard that, there's people who bought Bitcoin or crypto back 10, 15 years ago, and they've made 65 million% and literally become multi-millionaires. And there's some people who went to their accountant or their financial planner 10 years ago and said, I want to invest in crypto. And the accountant or financial planner said, no, don't do that. Don't be ridiculous. And told them not to invest. And then they come back several years later and say, hey, I listened to you and I missed out on making $16 million. I'm going to sue you. And Don't think it can't happen, because actually, as a financial planner, it has happened to me. I had a retiree. I invested his money, told him what to do. And his first year he's retired, he made 30%, which sounds great on the outset, but he found out his next door neighbor made 48% with a different investment. So that was one of my lawsuits, is when he came to me with his lawyer and said, hey, I'm going to sue you for the 18% difference on my life savings that I could have made if I'd taken a different path to what you said. So we want to avoid those things, right? We want to know what's going on and make sure we can actually protect yourselves and protect your clients from getting ripped off. Now, Holly, when I've got these slides on big, I can't see the chat, so I'll rely on you to jump in and tell me.
Yeah, no worries. In fact, I forgot to say before we started, if anyone does have questions, please do put them into the chat or the Q&A. I'll be keeping an eye on that. And I will, I'll chip in as we go along and ask Jeremy the questions as they come up. So please feel free to put them in as you think of them. Okay?
Yep. Standard investment disclaimer: all investment involves risk. Because there are no concrete crypto regulations at the moment, no one is licensed to provide advice on those. Obviously, your financial advisors can provide advice on stocks and shares and mutual funds, but not with crypto just yet. So the best you can do is give information to your clients and have a little bit more information to hand than what they do. So why we're looking at crypto, if you have a look at this slide, you'll see the top performing asset class for the last 10 or 15 years has been cryptocurrency. And again, there's some years there where it's been 1,000%, 5,000%. Okay. Does anybody know why that has been the case?
Anyone any ideas in the chat box?
Some of you guys will have stocks and shares where you might have had a good year. You might have made 20 or 30% like my client. Do you know why you can make 1,000% in crypto?
No guesses coming in so far.
This is a lot better when I can see you. I did a big presentation.
Yeah, we've got one.
Actually,
we've got one coming now. Volatility.
Volatility, yes, absolutely. Much more volatile than the stock market, which makes it much more exciting. But why is there so much more volatility in crypto than in stocks?
Ellis has put, is it because Bitcoin doesn't have a final top value?
That is also true. Yep, that's very good. Yeah, didn't think of that one, but absolutely.
And Bada has put, is it because it's unregulated?
Yes, that is also true. It can't be stopped. It can't be shut down. So, Holly, you probably wouldn't remember because you weren't born yet. But around about 25 years ago, there was this thing called the Twin Towers. I was invested very, very heavily in stocks. Literally, like, pick a figure that your mortgage is, multiply that by 5. That's what I had in the stock market, right? Back in 2000. I'd literally taken out my first home loan for my 7-bedroom mansion because I was making lots of money, 6 figures as a 20-something-year-old in financial planning. And I took out a mortgage for literally 5 times bigger than my house mortgage, put that into the stock market. And then several months later, I woke up and I watched the Twin Towers coming down and went, oh, poo. I'm in a lot of trouble here, right? Because I'm just imagining as soon as the market opens, my stocks are going to drop like a hot rock. But because the government can step in, they just go, oh, there's no trading today. And there's no trading the next day. And there's no trading the next day. So they actually turned off the stock market for 4 days so that people wouldn't panic sell. Right? But you can't turn off the Bitcoin. Now, if there's our math whizzes, I want at least 3 people to do this exercise. Okay. So there will be prizes, literally physical prizes that you can pick up and touch. So I want you to calculate as fast as you can how many working hours in 45 years.
Right, that's a challenge.
Yeah, so you don't count weekends, obviously. You don't count Christmas, you don't count Easter. Working hours. How many working hours are there in 45 years? prize to the first answer.
Okay, we have an answer.
Yep.
87,750.
Right. I'm hoping that person took off all the public holidays, of which there are 11 per year, plus the weekends. If they want to revise their answer, they can do it.
Okay, so we have some other figures come in.
Yep.
8,000. Well, we've got 9,000, 91,800.
Yep.
84,600. A lot.
I like that one.
87,750.
Okay.
78,300.
Yep.
72,000.
Okay. So stop. Now
Okay.
the next question. One of those is going to be more right than the others, and Holly can be the judge on that. Now the next question is how many hours total in 15 years? So just 24 by 365 by 15.
Okay. 131,400.
Right. Exactly. So the exercise there is that it's not just making you do some math to see if you're really accountants. The NASDAQ stock market started 45 years ago, right? It trades from 10 o'clock in the morning till 4 o'clock in the afternoon, 5 days a week, is shut on weekends, is shut on Christmas Day, shut on Easter Day. So the last 45 years, the NASDAQ has been open for around about 70 or 80,000 hours. Cryptocurrency only started 15 years ago. But because it can't be stopped, it can't be shut down, it trades all day, every day, it's actually been trading for almost twice as long as the NASDAQ in the last 45 years. So when you talk about volatility and when you're talking about these young kids who are making 1,000% and 2,000%, absolutely. Absolutely. Because you can cram, 50 years worth of trading into a much shorter space of time. And while we're sleeping tonight, there's going to be kids in India or China or Africa who are buying cryptocurrency and making the market move. It's not just a US thing or a UK thing. So, all right, looking at risk, because we can make money, we can lose money. Someone said the volatility. So, you can make 1,000%, you can also lose 99%. So, and this is another interactive one. I wish I could see your faces. These are my little puppies. I'm going to throw my two puppies out the window of an airplane. One's got a parachute. One does not have a parachute. Which puppy is taking the most risk? Again, prizes for the best answer. Or the first answer, correct answer.
Teresa's raised their hand.
Yep, Teresa.
If we can put them in the chat box. I think it might have been an error. Leanne is the first to answer, the one without the parachute.
The one without the parachute is taking the most risk. Leanne, that's a great answer. It's the answer that 97% of people say. It's also the wrong answer.
So Jan Hayes has put both.
When we're talking about risk, we're talking about the risk that your outcome is different from what you expect. All right. You think you're going to drive to work today, but if someone pulls out in front of you, maybe you'll be involved in an accident. So the puppy that gets thrown out the window without the parachute, his risk factor is 100% zero. He knows exactly what's going to happen, right? He's going to go splat. There's no two ways about it. The other puppy with the parachute, maybe the parachute doesn't open. Maybe it does. Maybe he gets swept out to sea. Maybe he gets tangled in power lines. There's like 53 different things that could possibly happen. Okay. Whenever you introduce something, you've got unknown quantities. So we can't reduce the risk to zero, but what we can do is mitigate that risk. Obviously, packing your own chute, right? Learning where the crosswinds are and these sort of things. So best we can do is to manage your risk by knowing exactly what you're doing, or you hire someone to do it for you. So sometimes you're driving to work and you're a good driver. And if you're not a good driver, then maybe you get an Uber. Okay. Everybody enjoying our little pictures of puppies?
Well, I am. I'm just speaking for everyone there.
I showed the slides to the CEO an hour ago and she's like, this is very, very basic. I said, I know, but I want it to be fun And I want them to be able to explain it to the clients. And sometimes the clients aren't as smart as you. All right.
We're all
So
right with
again,
basics.
interactive stuff. So just grab a piece of paper, grab a post-it note, grab something. It doesn't have to be big. It can, be like literally 2-inch piece of paper, or it can be A4 size, whatever. And I want you to write down the word COIN vertically on your piece of paper. So what I'm going to do is, as a great mechanic, I'm going to tell you exactly how to do it, how you can do this from home, how you can actually educate your clients, right? So that you look much smarter than what they do. Okay. And if you want to, you can do it by yourself. You can invest on your own in crypto, and you can make thousands of percent. I've actually done it many, many times myself. In fact, we've made more than 13,000% 6 times in the fund. I can't remember how many times we've made more than 5,000%. It's been a lot. And hundreds and hundreds of thousands of trades over the last 10 years. We've never had a single coin go to zero. That's the important part, because it's easy to make 1,000%. Sometimes you just get lucky, but sometimes you get unlucky. And a lot of the meme coins and things have gone to zero. So I'll show you how to avoid those losses. Okay. And it's very simple. Literally takes you 3 or 4 minutes. Cointelegraph came out a few years ago and said 92.5% of cryptocurrency projects are scams. Again, because it's not regulated, as Leanne said before. There are no regulations, so people can get away with murder, literally. Kind of like the stock exchange back in the olden days before the SEC and we had governing bodies and that sort of stuff jumping in. So it was snake oil salesmen and things like that. So there's a lot of scams where they've got a fake team. So we want to check out the team on the page, okay? Look at the C-suite, look at the CEO, look at the CFO, look at the COO. And you can do a reverse Google search. You can, click and right click and search for their pictures, check them on LinkedIn, check their names and photos. Sometimes you'll see a crypto project and all the people working on the team are just impossibly beautiful. And a quick check will show you it's stock photos, right? They're not real people. Or the CEO is a famous person and you click on them and go, oh, they are on LinkedIn, but they're not actually affiliated with that project, right? Scammers often use famous people, sometimes billionaires and Hollywood people and things like that, to pretend they're involved in the project when they're really not. So I want to check this. This is our first step. This is the C. Check the C-suite and see if that gets a tick, or if it gets a cross. Obviously, we avoid that one. Next one is O, is the offering. What does the thing do? What does this project actually do? Okay, you can hear my dogs in the background barking at the other dog. So there's been some good projects. I mean, Bitcoin is a store of value. It's also a transmission of value. It's basically gold that you can email to another person. Okay. I first started using Bitcoin 15 years ago as a way of paying people that I was outsourcing to, because I was outsourcing to people in Fiji and India and Indonesia. Some of these guys didn't have bank accounts. And if I had to use Western Union, it would cost $30 to $70 to transfer money to them. Whereas I could email Bitcoin, it cost 50 cents. I could send $1,000, it cost 50 cents. I could send $10,000, it cost 50 cents. Now it does something. Ethereum is a coin that is kind of like the oil or the railway. A lot of other projects run along top of it. There was a project out there where someone said, oh, we're going to put avocados on the blockchain, or we're going to do this. Is that helpful? If there was a company out there, digitizing avocados, would you buy stocks and shares in it? Probably not. Right? So we're looking for things that actually solve real world problems. Okay. Next step is to find other investors. And this 4-step process is actually adapted from my first book, where I had a 9-step process for choosing your own stocks. And again, it was almost foolproof. But this is just a simplified version. You find other investors who are putting money into the project. You can see these little puppies here licking away, trying to get the treat, which is actually on the other side of the window. So they're not real smart. So there's people who invest in things like anybody who invested in Trump coin, obviously was an idiot because it failed the O, right? The offering did nothing. The coin did nothing. It's just a gamble whether it goes up or down in value. Didn't serve any worthwhile purpose. Anybody who was buying that was very, very silly. One of the first projects that we invested in back in 2015, 2016 was called Power Ledger. So there was a couple of empty nesters, a couple of guys in Perth in Australia, and they were sitting at home saying, hey, I put all these solar panels on my roof when the kids are at home with their mobile phones and their, electric doodads. And now the kids have moved out. We're generating all this excess solar energy, but we're not using it because we're empty nesters. It's just me and my wife at home. And he was complaining to another guy who said, oh, yeah, the same thing. And he said, when I sell that excess electricity back to the grid, back to the power company, I only get 10 cents per kilowatt. But at night time, when I turn on the Netflix, I'm paying 30 cents per kilowatt. And it's really, it's a captive market. It would be so much better if I could sell that electricity to you, Barry, next door neighbor. I'd sell it to you for 15 cents, right? Half the price that you're paying at the power company, but 50% increase for me. Barry, the next door neighbor, just happened to be an electrical engineer who said, hey, all of the houses across the country are all connected to the same electricity grid. All the houses across the country are also connected to the internet. So they made this thing that was kind of like the eBay of electricity. So people with excess solar power could sell it to people who didn't have it and cut out the middleman, which was the power grid. It's a great idea. And they didn't have enough money because to list on the stock market, you need to put up £1 million as a surety. And then you got to do the marketing. Then you got to pay the brokers. Then you got to do this stuff. So it's very, very expensive to list on the stock exchange. These guys only had a couple of $1,000s, so they could list a coin as a project, like a little tiny stock, and start selling it to friends and family. Now, 6 degrees of separation. Somebody knows a guy who knows a guy who knows a guy who knows a guy. And this guy whose name was Dick went, hey, I've actually got solar panels. And Dick just happened to own a little place called Necker Island that was covered in solar panels. And he generated a lot of excess solar panels when he's not there. I'm not sure if you guys might know my friend Dick. So Dickie Branson decided to invest in this project. And that's when we sort of got involved, is like, oh my God, they've got like 14,000 investors, and one of them is Sir Richard Branson, who's selling his solar power through this thing. And I just sort of looked at him and went, well, he's smarter than I am. He's got a few more $1 billion than what I do. He's got advisors that he can pay to investigate and look into this thing. So I don't need to look into it so deeply. If he's on board, then that's a little tick for me, right? As long as the other things are in place. So you want to make sure you're in good company when you're investing into a project. And this is the last one. We're getting through them very fast because so far Holly hasn't interrupted me with all of your questions, but they'll come. And this is the important thing, whether it's stocks, whether it's cryptocurrency, right? You come to a stage where you might want to sell. So you need to know there's a network of people that are surrounding this project, okay? So let's say you got lucky, 20 years ago, you put $1,000 into Amazon, you're now worth, $6 to $10 million. You might want to retire. You might want to sell off a few of those shares. It's very easy to sell Amazon stock because Amazon is a household name. Coca-Cola is a household name. Virgin is a household name. So there's people who will actually buy your stock or buy your crypto when you're putting it on the marketplace. Sometimes you buy into a very, very obscure project that no one's ever heard of. Holly's sister-in-law's cousin's next door neighbor's winery. It can be very difficult to sell your stock in that one later. So that's where we look. 4 steps only, very, very simple. And, hopefully you get 4 ticks in a row. That could be a good investment. If you get 1 red cross, then you avoid it totally. You shouldn't ever get 2 or 3 red crosses because as soon as you get one, you should stop researching that project. Okay. So that, again, is how we've made more than 10,000%, more than 6 times. It's how we've avoided going to zero for the last 10 years on thousands and thousands of trades. And it's how you can look smart in front of your clients when your clients come in and say, hey, I've heard about this new crypto project. I want to invest into it, right? And you could ask them, have you researched this? Have you checked this? Have you checked that? Again, you're not giving them advice. You're just asking the questions that a concerned friend would ask. Okay. And you can
We've
also offer them an alternative.
Jeremy, we've got a question
Yeah.
from Jenny. Where do you search for the projects to start with?
Great question. Great question. So there's a few different places. When someone comes to you and says, "Oh, I've heard of this new thing. It's called, XYZ coin or whatever." There is a thing called Coin Gecko. I'm not sure if you have the little geckos that walk up and down your walls. So coingecko.com. There's Coin Market Cap. There's another one that I can't think of right now off the top of my head. But these are places where you'll get information on the coins. Another good site is called Weiss Ratings, WEISS. So when you're looking at stocks, sometimes you'll go onto a stock site such as like Yahoo Finance or something like that, and they'll rank the stocks and say, A or a strong buy, whereas other ones are a sell or a hold or something like that. And that's good because it's somebody else giving that advice. It's not you. You're just reporting what someone else has said, because you don't want to cross over that line where you say to someone, "No, I think this is rubbish," or "Yes, I think this is great," because Murphy's Law will tell you the one you told them to avoid is going to go up 20,000%, and the one that you told them to get into is going to drop by 90%. So it's okay if you're reporting on what other people have said. And those are just a couple of websites that you can have a look at.
Okay, great. Thank you.
So that's it. That's basically what you want to do. If we've got a couple more minutes, I can show you a more in-depth little study of what we've done. Has anybody got any major objections to that?
No, I think that's fine.
If you want to get my stock market book again, which teaches you how to choose your own stocks, also the property cycle and the stock market cycle, as we should know, those run in opposites. When the interest rates are high, people stop buying houses, they move to the stock market. And when the interest rates are low, usually after a market crash, things run in different cycles. It's basically how to double your money in half the time and avoid dodgy stocks. So the white glove service is where we do it for you. Right? So I've just taught you how to do it yourself if you want to. But we did create the world's first diversified crypto fund, because when I started trading in crypto myself 10 years ago, just going, "Oh, this is like a little stock market. I know how to do a stock market." And I taught a few friends, literally exactly what I've just taught you now is what I was teaching other people 15 years ago, 10 years ago. And invariably, I had friends who were accountants, lawyers, doctors, dentists. They said, "Oh, that's really great that you've taught me how to do it, but I don't have any time. Can you do it for me?" I went, "Well, not legally, because I can't run your account. The only way that I know is how we created stock mutual funds back in the olden days. And then we have a pooled investment fund where everybody puts in $10,000 and we run it together." And that's what we did. It was very difficult back then because no one had done it before. And when we went to the first accountant and said, "Hey, we want to create a unit trust so that we can have a pooled investment vehicle," and they went, "Oh, where are the assets located? Are they US stocks? Are they UK stocks? Are they Australian stocks?" We're like, "They're kind of located everywhere, but also nowhere because they're invisible and they're on the internet." And they're like, "Oh, okay." That's going to be difficult. So we had a devil of a time creating this thing because there was no legal precedent for it. When we did, we actually contacted Morningstar, who's the gold standard for stock mutual funds, and we said, what do we need to do to be compliant with stock mutual fund rules, because we thought the rules were going to come in for crypto 10 years ago. And they said, "Do this, do this, do this." So we did. We sent it back to them and said, "Is that okay?" And they said, "Yeah, how would you like to be the first crypto fund on Morningstar?" And we're like, "Great." So they've been auditing us for the last 10 years and checking over our stuff and hosting us. And it's like an index fund, like you would find on the Vanguards or the BlackRocks or anywhere else, diversified into a multitude of different cryptocurrencies. We also hold stocks in there as a defensive position. So every now and then there is a war, every now and then there's a plane crash. And there's different things that go well in peacetime versus wartime. With the cryptocurrencies, if the crypto market starts going down, what happens? Everybody rushes to the exchanges and they start selling their tokens, same as you'd rush to the stock exchange and start selling your stocks, and you pay brokerage. So the stock exchange makes money whether the market's going up or down. Crypto exchanges make money whether the market's going up or down. And of course, the fiber optic networks, the telcos, these guys make money the more cryptos come online. So diversified in there, because when something's going down, you want the other thing to go up. That's what we do, pure and simple, same way you've always done with stock mutual funds. This is just a little bit about me and our team. And again, studying markets. I've been in the markets. I mean, I started when I was a teenager, fresh out of school, straight into financial planning. Didn't know anything back then. So I would follow the 50-year-olds around and ask them a lot of questions. And eventually one of them passed me a chart that here's the stock market over the last 200 years. Study that. And I'd start to see patterns and go, World War II, this is what happened. When the interest rates were very high, this is what happened. When the recession hit, this is what happened. After 9/11, what did the Federal Reserve do? Printed cash. After the 2008 GFC, what did the Federal Reserve do? Printed cash, dropped the interest rates. And so you start to see these patterns, which is why we could actually forecast these events with about 80% accuracy. 2 years before the GFC, we told people that it was going to crash. Michael Burry, if you've seen the Big Short movie, Michael Burry saw what was going to happen, told no one, took $1 billion bet against the banks and made another $1 billion on top of that. We actually saw what was going to happen and tried to tell as many people as possible. Published that book in 2006 to say there was a GFC going to occur. And 2020, we warned investors 6 months before the pandemic because we were looking at what was going on in the market. Didn't know about the disease, but it was actually very profitable to get our clients out of stocks and get them into gold and silver and Bitcoin. I think gold went up 50% during the pandemic, silver went up 100%, and Bitcoin went up over 400%. So our investors who got the free newsletter avoided the stock market crash and also made some very good gains. The Boston coin portfolio outperformed Bitcoin for 8 years. Again, not because we're geniuses, but just because of the diversification. When one thing goes down, something else goes up. So we diversify into there. And just recently, like literally in the last few weeks, we've launched some new funds. So we've got sort of a medium risk fund and then a higher risk fund and a lower risk fund. And just in the last few weeks, literally 27th of December last year, we had some Muslim guys come to us. And I'm not sure, has anybody got any Muslim clients or any Jewish clients? I don't want to preach to the converted here.
I'm sure some people must have who are on the webinar today.
Yeah. So I knew a little bit about them from my financial planning days, that the Muslim clients would invest money into the bank, but were forbidden from earning interest. And when they took out a loan, they also are forbidden from paying interest. So I knew that much. So it's great. If you're taking out a $1 million mortgage, you don't care that the interest rates go up or down. But when you sell your house, you have to give 10% of the house value to the bank. So the bank becomes your business partner rather than charging you interest. And if they give you a business loan, they've got a vested interest in your business succeeding. Like a normal bank would lend you $1 million for your accounting business and say, hey, if you fail, you still got to pay us back. Whereas the Muslim bank would say, yes, we'll lend you the money, but we'll take ownership of a small percentage of your business and we'll assign a mentor for you and we'll help you out because we want you to succeed because it's also our business as well, right? So these Muslim guys contacted us and said, hey, we want to invest in crypto. A lot of our non-Muslim friends are investing in crypto and they're all making 1,000% a year or whatever. But we can't because it's forbidden. And I was like, oh, that doesn't sound right. So we started doing some research and found out, yes, they can't earn interest and they can't charge interest. Also, they can't invest into anything that's pork belly futures and things like that, similar to Jewish tradition. But they also couldn't invest in gambling because gambling is forbidden by their religion. And the high-ranking Muslims said any coin that doesn't do anything, for example, Trump coin or Pepe coin, you're only buying that because you think it's going to go up or you think it's going to go down, which is the same as gambling. If that coin serves no worthwhile purpose, it's okay to invest in stocks that do something like bank stocks or car manufacturers or telcos or whatever, because while the price is going up and down, it also provides a service to the community. So these Muslim guys said, look, we can't invest in gambling, we can't invest in interest, we can't invest in this, we can't invest in this. So we did a lot of research and found out of 23,000 available tokens, there was 192 that they could invest into. I went, cool, we can make a little fund for you out of that. And one of our traders is a Jewish guy in New York. And he went, oh, yeah. And Jewish tradition, they can charge interest of a non-Jew, but they can't charge interest of another Jew, and they can't do futures, and they can't do pork bellies, they can't do this. And oh, shit, we have to create one for the Jews now so that no one just feels super special. And now we've covered the 5 major religions so that they can actually invest in crypto and feel included, whereas before they weren't allowed to get into the market. So that's just a little bit of financial inclusion that we've thrown in there, which is a bit of fun.
Jeremy, we've had a question.
Yeah.
What is the difference between high, medium, and low risk crypto?
Yeah, great question. I wonder if I can share another screen. How much time have we got, Holly, before we run out?
It's about 1:10, and we usually go on until 1:30 at the latest.
Okay, so I'll just show very quickly. Let me see if I can share this. Where did it go? There we go.
Things are never there when you want them.
Yeah. All right. So are you looking at the Boston screen now?
I can still see you at the moment.
Okay.
Yep, it's sharing now.
Yep.
Yep, so the website is up on screen now.
Okay. So a lot of great stuff on the website. I'll just jump in here. There's my book that you can get for free later on. So Bitcoin is the OG, right? It's the original cryptocurrency, store of value, digital gold, and it's around about 60% of the entire investable market. Okay. If you look at stocks and shares, you'll see a similar thing. Like the S&P 500 in the US, there's 500 stocks, but the top 7 stocks, which are Facebook, Amazon, Netflix, Google, they're about 80% of the entire market, right? Just the top few. So Bitcoin takes up about 60% of the crypto market, and the other thousands and thousands of coin take up the other 40%. So what we do with like a similar, it's what we call an intelligent index fund. We get 60% Bitcoin, but out of the other thousands and thousands, we avoid all the rubbish, all the gambling ones, all the meme coins and stuff, and we buy the smart ones, which we've researched using exactly that process that I've just showed you. So you can go onto here because we believe in full transparency, live updates in real time. So this is what we're holding right now. And if you check back again in 5 hours, you might see, oh, we've sold off a little bit of Ethereum, and we might have gone down to 8% in there and dropped some in this one, for example. Okay, so that's like the index, which is a lower risk, it's sort of medium risk. And then because the first 4 years in that, our clients averaged 366%. Most of them were happy, but there was a couple of younger, high octane, motorbike racing kind of guys who said, what else have you got? Because we've heard about this 14-year-old kid who made 10,000%, right? Everyone's heard of that, but no one's ever met the kid. So then we made basically a flip of the index where we have 40% in Bitcoin and 60% in the altcoins. Okay. So 40% in the sort of the gold standard, and a lot more in these ones, where Solana, I think we bought for about 18 cents. 2 years later, it was $150. Mantra we bought last year for 9 cents. And within 6 months, it was up to $5.50. We then sold off half of it, take the profit of 6,000%, and we held on to half of it. And the half that we were holding on to still went up another couple of thousand%. So these ones are much higher risk, but also higher rewards. And I'll just show you one last thing in the monthly updates. So you can see how it goes compared to stock market returns. And again, higher risk, higher rewards, right? So there's like 10 years worth of market updates in here. So if anybody wants to track back and say, did he really predict the pandemic crash in September 2019, you can check in there. That's timed and date stamped and all done. So we give a market overview because, again, we're old school stock guys. We look at what's going on with interest rates, what's going on with commodity prices, what's going on with stocks and shares, and how does that affect crypto. So this is the medium risk fund over the last 10 years. And you can see, had a really good year there, over 1,000%, and then dropped by half. Okay. If you'd been in there for 2 years, you're still in front. But it was pretty scary. And then it took a little while to recover. So there's Mantra up, 12,000%, Pendle up 240%. This is the higher risk fund, which again, massive year, dropped down, did go below the S&P 500 performance for a little while there when we had the FTX collapse and that ratbag kid going to jail. And now is bouncing back up, a couple of 100%. And then we've got the lower risk fund, which had a bad week and then is tracking back. So, yeah, great question. And the obviously with what we call the faith-based funds, those ones aren't as exciting because we've got significantly less to choose from. But interestingly, when we launch those, we haven't launched those to the actual general public yet. We've just told our investors about them. This is what we're doing. The official launch, we're off to Dubai next month, which apparently is where a lot of the Muslims and the Hindus happen to live. So we're launching at the Financial Technology Summit in Dubai next month. But when we told our investors we're making Hindu funds and Jewish funds and Buddhist funds and whatever, one of our very wealthy doctors rang up and said, can I invest in the Muslim fund even though I'm not Muslim? And we said, sure. Obviously we want financial inclusion, right? We're happy to take your money. But do you have Muslim family members or why do you want to? And he said, because I've done the math. There is 1.8 billion Muslims. There's only 192 coins they can invest into. So when massive demand meets a very limited supply, what do you think is going to happen to the price? And I was like, oh my God. Imagine if the Archbishop of Canterbury came out next Tuesday and said, all of you Christians can invest in crypto, but you can only invest in XRP and Bitcoin. Those coins would go up 10,000% and all the other ones would go down. Go, oh, that makes sense.
Oh, fantastic. Thank you. So I've just removed the spotlight there. We've got a couple more questions that have come in. What's your prediction for prices at the minute as they've dropped recently?
Yeah. I'm sure you saw like last October, I think is when I did my tour of the US, and Bitcoin was around about 62,000. And by the time I left the US, maybe 3-4 weeks later, it was topping up about 75,000. And then, when Donald Trump came out and said, we're going to make the crypto the capital of the world, blah, 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 promises, right? Politicians. Bitcoin price went up to 109,000. And more recently with these tariffs and his silly nonsense that's going on, it's dropped back. Last week, 2 weeks ago, it was 77. And people going, oh my God, it's dropped down. It's going to zero. It's like, well, yeah, but it's still up from where it was 6 months ago. And it was actually a buying opportunity. So on that day when it dropped to 77,000, I was giving a presentation to another team of accountants in Sri Lanka, and happened to finish at like 10 o'clock at night. And at midnight, I was buying Bitcoin at 77,000 because it was so cheap. And now you've got institutions who are buying in. It's not just retail investors. So retail people tend to panic And, like after 9/11, the Twin Towers going, oh my God, it's the end of the world. It's World War III. All the stocks are going to zero. Whereas the institutions are more clinical and they look at the long-term value and they go, oh, it's 30% off. I'm going to buy some more. And that's what we try to do, is take the emotion out and say, if it's 77,000, it's cheap, we buy more. And then the price is lifted up now to what, 85, 87,000. So there's, there's buying opportunities. And that's why you'll see those bubbles on our website will change occasionally, because we'll sell off when something's gone up or rebalance. We'll hold some cash. And then when the price drops down, we'll buy some more. I mean, most of you people are smart enough. If you see beans for half price or toilet paper for half price, you go, oh, stock up, right? Because I know I'm going to use that in 2 years' time. And I was buying Bitcoin 10 or 12 years ago, thinking, I know I'm going to use that to pay my outsourcing staff. So I was buying it back then before I even knew that it was going to go up in value. I was just using it as a store of value. So yeah, have faith in the system. Have faith in the 200-year stock market chart or the property chart, because properties will go down in value when the interest rates go up, but they don't keep going down, because eventually it gets to a price where people go, that's a bargain, I'm going to buy it, and the price will go back up again. So, great question. Thanks, Jenny.
Fantastic. We have another question as well from Barry. Last night's Rose Garden event. I'm not sure what he's referring to there. Are you aware?
There's someone who has a rose garden who gets entirely too much publicity, and this is the fun thing. I mean, when we had the events leading up to the global financial crisis, and if you've seen the Big Short movie, you'll know there was dogs and cats and raccoons who were getting mortgages. And the US has a different system. If you can't pay your mortgage, you throw the keys back down and you walk away. If you're underwater in the mortgage, the bank takes the hit. Whereas in Australia, if I buy a house for 500,000 and sell it for 450, I still have to keep paying that mortgage off. The bank doesn't take the hit. So when that was going on in the US, you thought it's going to affect the UK, because the UK lends a lot of money to the US banks and Australia borrows from the US banks. So when they say it was the global financial crisis, it really hit 3 or 4 countries, but the English-speaking countries. China wasn't affected. The GFC was also called Go Forward China, because that's when they really came into their strength, 10 years ago. But the thing with cryptocurrencies, it's the first truly global asset. So as I said before, like while you're sleeping tonight, there'll be kids in India, Africa, China, who are buying these coins and selling these coins because of something else. You think people in China are watching the news and seeing what Donald Trump does? They don't give a crap. There's 300 million Americans and they think they're the most important country of the world, but there's 1.6 billion in China. There's 1.2 billion in India. There's 1 billion in Africa. They don't know what he's doing. They don't care. They're just buying because of their own preferences and what they think. So,
Okay, thank you very much.
I'm sorry, Barry, if you really, really love Trump, but in the scheme of things in the world, he's just one little tiny country.
Good answer, says Barry. Yes. So we have another question from Damien. What 3 coins would you invest in right now?
I'm hoping you've got a list that you can send me, Damien. Funnily enough, the one that I said before, Mantra. So Mantra, it's called Mantra. If anybody who's a meditator would know what a mantra is, and the symbol was Om, like the universal thing. And one of my team sent, hey, have you seen this coin? It's called OM, it's called Mantra, because they know I'm a meditator. I've been a passionate meditator for 15 years. And they sent it to me as a joke, like, have you seen this little coin that came out? But I research every coin that someone passes across my desk, and I go through the COIN and went, yep, C-suite's good. They're all financial guys. The offering was they were tokenizing real world assets, right? Not all of us can afford to go out and buy a Van Gogh or, antique pianos or Rolex watches and this sort of stuff. Those luxury goods are basically what we call the recession-proof assets, because in a recession, they don't go down like stocks and shares or property. They actually go up, right? They're scarce things. And what Mantra was doing was buying these expensive assets and then going, okay, we basically divvy them up into 1,000 units, and each person can buy 1,000th of the Van Gogh, 1,000th of the Rolex wristwatch, and they can trade them amongst each other, and you could have a diversified portfolio of luxury goods. So when I saw what they were doing, I was like, hell yeah, I'm going to buy this one. As I said, it was 9 cents. And then when everybody else found out about it, it went up to $5.50. So the coins that I see, literally hundreds of coins come across my desk on a weekly basis. I can't keep tabs on all the new ones that are released, but sometimes people will give me a hot tip and I'll look at it and just go, oh, well, 3 ticks, 1 cross. No. If it's 4 ticks, then absolutely. So yeah, there's always a new one coming out, because the barrier to entry, you're not listing on the stock market. There's literally 10, 12-year-old kids who can launch their own coin. And that's why you have so many meme coins. And there's literally there's fart coin, and there's goldfish coin and peppy coin. Anybody can make one for anything they like, which is good and bad, because obviously there's a lot of dodgy ones. But people out there with a great idea that couldn't necessarily have enough money for a shop front, they can sell online. They don't have enough money to list on the stock exchange, they can create a token. And it's basically democratizing wealth creation for an entire generation of people that never would have been able to do this. So that's probably an obscure answer, Damien, but I'm hoping we'll find out. Otherwise, you can keep an eye on the bubbles and see what we're buying. You can copy our trades. That's okay too.
Brilliant. Thank you very much. So any final questions? We've got a few minutes left. So if anyone does have any burning questions that they would like to ask of Jeremy while we've got him, that would be great. I know it takes a while to type into the chat box, so just give you a second. Are you able to see the chat box now, Jeremy?
I am now. Yes, thank you.
Okay, so you can see the question there from Therese.
Yeah. So Therese, if you want to buy yourself, you can go onto any of the legitimate crypto exchanges. There are dodgy crypto exchanges as well. So yeah, there's CoinSpot and Coinbase and CoinStash. Check out the reviews online. So when someone says, "Oh, use this app," check the reviews. Check for Trustpilot or Google reviews or something like that to make sure it is a legitimate exchange. I literally had one of our accountants that I was presenting for the other day in Sri Lanka. The head of the network had been ripped off by a dodgy exchange, and she'd put in a decent amount of money, and it was a complete scam because she didn't check out the online reviews. She just believed when someone sent her the link. So you can buy in your own name. It's usually a process where they take your photo ID to prove you're not a terrorist, because the Banking Act, the Counterterrorism and Anti-Money Laundering. And depending on the amount, if it's an amount that you put in, you say it's a couple of $100. If I lose it, it's not going to affect my life in any way. That's fine. You can put it in what they call a hot wallet. You can leave it on the exchange. And every now and then, an exchange will get hacked. Like banks can be hacked, right? And if you lose a couple of $100 and it doesn't affect your life, then whatever. That's the risk that you take. It's a 1% risk that you'll lose that. But if it's a decent amount and you've got millions of dollars in there, and if it disappears, then it will affect your life. That's when you start to look at things like cold storage, offline storage, and things like that, where things can't get hacked. Banks, as I say, banks can still get hacked. Banks can still go broke. We've seen that in the last few years. Cryptocurrency is one thing that was built as the antithesis to the banking system, because it can't be stopped. You can transfer money at midnight on a Wednesday or on the weekends and things like that. And you can also take it offline. You can have it stored into a little, like a USB device. Not sure if you can see that. Mm-hmm. And have it out of the system, not even connected to the internet. So it can be very, very secure. We do ours in offline storage. We put them in a fireproof safe. So, and have multiple backups of it as well. So yeah, that's, I'd say, yeah, check online reviews, make sure you get something legitimate. We're happy to provide a lot of information. Even before we started the funds, we had a not-for-profit organization, and we still maintain that to this day. Every month we upload a helpful article. We've been doing that for 10 years because of all the things I've learned in the stock market and the crypto market. You don't have to deal with me. That's okay. But the least I can do is show you how to not lose money, because it takes you a long time to save up $1,000. Like you've got to make a couple of $1,000, pay a bit of tax, and then pay your expenses, and then put that money aside. But it takes you about 2 seconds to lose that £1,000. Right? When someone scams you or you put it into the wrong investment because you didn't know any better. So we'll help you as much as we can. Because again, if you don't want to deal with us, that's okay. If you've got time to do it yourself, we'll show you how to do it yourself. But you might have a friend who just doesn't have time, doesn't like getting their hands dirty. So the best we can do is like, here's the car manual. Here's look under the bonnet. We'll show you what to do. And if your grandmother doesn't want to do it for herself, then maybe she'll come and deal with us. And it's the circle of life.
Thank you very much, Jeremy. So we are just about out of time. If is it possible to put your QR code up on screen again, the one that you shared with us earlier, just for the last minute or so? Are we okay to tell people how to get in contact with you in the follow-up email, Jeremy?
Yeah, it's just bostontrading.co.
Yeah.
No M. We're saving up for the M.
Okay.
Been saving up for the last 10 years. Can you see that QR code there?
Yeah, it's a little small, but we can see it.
Sorry, let me get down.
I think we've gone into the presenter mode again now.
Yeah. I just got to skip all the way through to the end if I can do that really quickly. bostontrading.co. If you want to learn all the other stuff, there's our sister site is Cryllionaire.com. So CRY for crypto, and then the last bit of millionaire. So that's where we interview the founders of different crypto projects. We give away a lot of education and information for those people who do want to learn more and do learn how to do it themselves. So yeah, absolutely. We just want to help. We want to make it financial inclusion so everybody can get into crypto. The same way that, back in the 1800s, only the very, very wealthy people could have stocks because you needed to have a broker and you needed to know what you're doing. And then in 1971, Jack Bogle came out when I'm going to democratize this, and he created the world's first mutual fund for stocks so that anybody could throw in £100 and have a diversified portfolio. And now that's what everybody has with their retirement funds and things like that. For £1,000, you can have 20 different stocks. So that's what we're doing for crypto, is showing you how to do it and how to make it easy so that anybody can do it, regardless of their religion, regardless of where you are in the world, regardless of how much money you've got. So
Great. Okay. Well, thank you very much. If everyone can just join me in saying thanks to Jeremy in the chat box, that'd be brilliant. I hope you got a lot out of that webinar. I certainly found it very enlightening because I literally know nothing about crypto, so I may educate myself now and visit your website. So yeah, lots of thank yous coming in. I'll just leave it to say thanks very much again, and hope to see many of you on the webinar next Thursday. So have a great week, everybody, and thank you very much, Jeremy.
Thank you for the great questions. Thanks, Holly, for hosting. Thank you.
No worries. Take care. Bye-bye.